Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we're going to go through a market update. It's a lot to talk about. I could probably fill 2 hours. We'll try and condense things so we can, close it up prior to the Fed, speaking this afternoon. So our goal is 45 minutes. So we'll do the market update. We're going to also kind of talk about Fibonacci levels. Joe did some work and we can post that in the shared drive after. And Shawn has a few trades that we can talk about. Sorry if there's background noise. It's spring break and I have 3 large children circling around behind me eating and stuff. So I guess the other news is kind of up front here. We have some issues, data issues with our earnings data coming in from our provider. So we have a delay. Right now we're in a holding pattern until we can get that resolved in order to release the Q1 report. So that's just kind of on a TBD right now. We're trying to get it resolved as quickly as possible, but we don't have a estimated time when that's going to be updated. So, as you go throughout the system, you'll see a lot of earnings dates are blank or not properly filled. So that's where that is. Apologize for that. So let's just go into the market update here. So you can see overall for the indices, same 8s and 1-4. So no change there, just been bouncing around. Green pies covering, we talk about when the bullish states are below 30, that's an oversold condition. So it's just been teetering right on that line for, like a week or two. So we'll take a look at that. I think the big kind of development over the past week is the state 8s have been going up quite a bit. I mean, we're at over about half of the issues being in a state 8, which is our most bearish state. And when that happens, when things are in state 8, that's when things can have sustained downward movements over, long periods of time. So definitely something to take notice of. So let's look at the market pulse. The state 8s, as I said, we're just calling it 50%. Kind of pretty low on the state 1s. Now, if we take like a longer term perspective, last time it crossed 50. And it's only happened a few times, so I'm going to go through those kind of quickly here. Back in 08, 2020 here, we popped above 50, and that was pretty close to the bottom. Although the state 8s got up to 86%, and state 1s got down to 3. But as far as S&P move, once we got over that 50, it was fairly close to the bottom. It still had a little more run-in to do. You can see it's March 11th, and the bottom was the 23rd as far as price. So, so that's one instance where we got over 50, and I'm just going to pull it all the way back. It's going to be kind of a busy chart. I think if I take out the state 1s, it'll make it a little, that clears it up, right? So you can see the 50% line here. So you can see obviously 08, this is back in November 07. That's the first cross. From there, I think we all know what happened. We got up really, like astronomical numbers in state 8. And this is like a weekly basis. So if we go down on an individual, it's going to be even higher for the percentages. But so we know that one back in 2011, we had, and I think I'll just zoom in on these. So we had 11, and then we had 15, and then we'll talk about 18 last year. So let me just zoom in here. A little bit more. So I'll get these two kind of together here. So this is in the 50s, not on. Let me. I'm trying to get the 50 on there. It's not showing on the side here, but so we can see, halfway between. But so it popped up. That was pretty much the low. Went sideways for quite a few. 2 or 3 months here. I think it barely made a low here, a new low, but nothing too significant. I'm just trying to get it. Yeah, this is a little clearer. So there's your 50%. It was on the 122, so barely made new lows there. And got all the way up to the 70s, but basically moved sideways from there. So nothing too significant, sideways movement. I think the same as for back here when we got, that's over 50 right there, kind of near the bottoms, sideways, kind of retested, pretty much sideways movement for a few months after. So that's those two, and then the other one is 18, and this one, I think it's a lot near term. I remember this one a lot clearer, living through this. So we got to the 50 here in October. This is when they went crazy with the rates, right? So, from there we made huge new lows. So when they finally cut off, and turned around, we got the V bottom there as far as the rates, but that's when they were going crazy with the rates. So, I don't think they're going crazy with the rates right now, but we're kind of at the lift off. So, so at a minimum, it looks like most of these, 3 of them kind of went sideways, and then, we had a plunge here. 08, obviously it went sideways for, but it was a gradual down, and, obviously accelerated throughout there. And then, the Corona was kind of, that one, that was just a kind of black swan type thing with the V bottom. So, as far as, how it applies to today, I think if we, keep an eye on that. Obviously, it hasn't happened a lot, but what it's telling us is, unless it's a V bottom, we can expect, like retests of lows, potential for new lows depending on, how things go. But I wouldn't say it's a definitive, but the Corona one kind of throws it off. That did make new lows after the after it hit 50, it kept going down and down. So like there's the 50 cross, 274, we got way down low. And, at that point, they turned on, stimulus, and, there's a bunch of stuff going on. So that wasn't too far. I think most people remember that. But so it seems like most of the time it's going to retest lows. And, I think only one time it didn't really make new lows, significant new lows. So 1 or 2 times, but we can expect at least, retests. I think we're, pretty much higher. So sideways movement, a couple of months based off of that. So that's kind of it on, as far as the bullish bearish, but not a whole lot. We're just kind of maintaining, right off of that 30 level. The kind of flags start going up if the bullish drop below 30%. Like here, there's 22, and I've shown you guys this a bunch of times, but we're pretty much just treading right near that 30 as kind of like a bottom. So that's something that keep your eye on. We drop below there. Now we're according, to what we put out of Delphian. If we're below that 30, then we're oversold. As far as the new lows, obviously a lot of volatility in market, and it shows here, popping up thousands at a time. I expect that volatility to continue. As we talk about what's going on with the Fed, obviously geopolitical, lot going on there, and I think we'll get into that in a minute here. But that's kind of the sum up on the market pulse. So let's get into the analysis of SPX here. Still in state 4. You can see the modeling's done a great job. Now we got strong support here, bullish support down at target 3. 1, 2, 3 different times. Try to get below there. I think right now we're at the first level of resistance as far as state modeling on the way up here, which would be the entry price. So I think we're kind of hovering around there today. So that's kind of the key levels. Obviously, target 3. If we get below there, obviously a bearish. I'd expect, if we can get below there and hold, I would expect a transition to state 8 for SPX. It's been the last holdout of all the indices. If we can get above 420, 43.26, that's obviously a bullish sign. I think if we look at the charts for SPX, that'll give us some more indications here. So here is the trend line. I drew this one right here, heading down. That's the one I drew up last week. So I think we're probably right around there right now as far as the markets. 430, so 430.8. Sorry, I got so many tabs here, it's hard to track. So if we zoom in on that, we're pretty much right around that kind of resistance. So that's going to be, the first level, short-term trend here, at least right now. So that'll be our first level of resistance right over 4,300. Obviously, we just had this cross as far as the 50 and the 200. Let me zoom out. It'll become a little more clear. So that's the 50 on top, the top green line. And then, so on Monday we crossed. So now, I think we'll go through a kind of a quick analysis of 50 and 200-day crosses for the SMA. But the 50 is going to be your next level of resistance, 44.50. So that's right at your stop losses, 44.50. So state modeling, once again, doing a great job here. So here's pretty much coincides with our trend line right now. And then this is our 50-day, and 200 is going to be right above that. So, so you don't have to look too far off of state modeling at this point. Let's also kind of look, before we go do a 250 quick dive, look at the Fibonacci's. Obviously, we're still in that top band as far as SPX. So, that level right there on the downside is 40, let's just call it 4,200. And we'll go into those with Joe here in a bit. So obviously, move below that is going to be bearish. And then on really, I'd just go off the target 3 right here, 41. So you can see the bounces off of that. So that's your downside, the support. And, if that breaks, obviously we discussed that. So let's do a quick cross talk for 200 and 50-day SMA. So you can see here, Let me zoom in a little more. So, when these things cross, how we normally have it is, the 50s, your first level of support. And, we'll go through the charts kind of quickly and you'll see it's a great indicator. And then, the 200's the next level. So when they cross, it's going to be the reverse. So, this will be, the 50 will be your first level of resistance and the 200 is your second level of resistance. So once you, pretty much once you get over there, over both of those, and, ideally you'll get a retest of, the 200. Here you got it twice. That's kind of like, the all clear sounding. So you can see what happened here. That was pretty much that went across there on the 30th. That was past the lows. We're already on our way up. So it's not really like a death cross, people call it like that, but it doesn't happen like that all the time. So so ignore those headlines. So here's back the rate tamper, when they jack the rates back up in 18, way too fast. So here, we had quite a significant move below after the cross. So on the way up, kind of blew through the 50, had a little resistance at the 200, came over, retested, pretty much all clear, retested again over here, but you can see like, that's where the 50 started turning into the uptrend. And, the 200 provide great support, after a cross there. So you can just kind of, as you look through these charts, you can just see like how strong these indicators are. I mean, 200, look at that, 50 does, great job, first level. Just kind of want to emphasize that as we kind of troll through history here. So, back here, once again, this was kind of like the bottom, obviously retested back here. A lot of these crosses are, coincide with kind of what we talked about with the state eights, with the big spikes. So, we crossed here, kind of retested lows, and did it further. But you can see, we got through the 50, even got over the 200, but came back down, tried again, failed, came back and then went all the way down below, got above 200, retested the 50 here and then retested the 200 here. So that's kind of like all clear on that one. So I'm kind of going through these quickly. I don't want to eat up all the time, but that's kind of how I see these. And, just look at the support, for that 200, 50, they're very important indicators. Yep.
Hey, Josh,
Mm-hmm.
I don't remember, what was the catalyst back in 2015 that caused it to drop?
I think when that taper tantrum, I'm just off the top of my head, I think, but trying to remember. Does anyone else know for sure?
I'm not sure, Josh.
Okay, I just wanted to put it into perspective with 18 and COVID. So thank you. Sorry to interrupt.
Okay. So so here, we had another cross, blew through the 50 here, failed at 200, basically, bounced off 50 twice, had problems here, bounced off the 50, finally got over that 200 here and didn't really retest until way down here. But, it was retesting the 50 here. So not as clear as the other ones. I mean, ideally you want to see, break out here and then test that 200 and then bounce off. And then that's kind of like the all clear. So this all clear took a little while. And this was back in, 2012. So This is kind of same thing. You can just see the importance. The cross was the bottom. So, the cross could be the bottom this time, so we just have to watch it and, watch these kind of key levels. See if it runs into, obviously ran into problems here at the 200, came back, blew through, and then, retested 50 and they're off. Same thing down here. I mean, this is 08, 07. So there's your cross, it popped up, like ran down, then the 200 was the big problem there. And then the 50s providing, resistance to the upside till here, then you get the cross above retests, and then that's pretty much July, so that's kind of how I look at those. I know it was quick and, but just want to kind of go through that since, these don't happen very often, and it's not, the sky is falling all the time, but, kind of see how it goes, and look at those key levels, the 50 and the 200. Obviously, they're right on top of each other right now, but, near term for SPX, that trend line, you can draw that on Yahoo charts, whatever. And then your 50 is kind of your next level. Sits are pretty much right on top of each other. So that's what I'd look for there. Russell doing the same thing, it bounced off key levels here. That target 2 once, twice. This time it bounced off target 1. So that's kind of our range right here that we're, if we can break through that, that's going to be, big for downward movement. And we got the top up here and these stop losses. So those correlate pretty much the same thing we talked about last week with these levels. Let's see if I can pull it in a little better. So 2100 is the top of that channel, and it's like 19 something, or yeah, right around 1900, just to make it easy on the downside. So that's the channel Russell's in now, and those are the Fibonacci levels. So I feel like I've been talking straight the whole time. Joe, do you want to go through Fibonacci's while we're on this, and then I can continue with the other stuff after the Fed stuff?
Yeah, Josh, I will. And you have the Russell chart up. Why don't? Okay, well, here you got this guy. So I just thought, in the context of the Fed announcement and the extraordinary volatility that we've seen in the market now for many, many weeks, might be good to go back to the March 2020 lows, the COVID lows, and run retracements, intraday highs, intraday lows. So I started with Russell, did NDX, did SPX, Dow, and then just more recently just oil. But the Russell, so I put together the sheet that Josh will post to the share drive after we're done today. What's kind of interesting and not a complete shock, the Russell, and then I've got two NASDAQ indexes, the composite and then the 100. All three of those indexes basically have corrected just shy of 23%. And all three of those indexes, just in the last 2 days, well, actually, you could argue maybe that the Russell did a 3/8 retracement at the end of January. It certainly was close enough. But those three indexes have now completed a 3/8 retracement going back to the March 2020 lows, almost, to the number. So it gets back to the whole Delphian, a shook. Josh and Shawn always look to the Russell kind of first. As it turns out, the Russell topped well ahead of all these other indexes in early November, followed by NDX in late November, and then it was January 4th for the XPX and Dow. So we've had this slow, steady decline in the Russell. We got the 3/8 retracement, and now we're, already 7% off, the recent lows in the Russell. I mean, that's how fast all this stuff is moving. But it's kind of, that's Russell, and NDX they're kind of trading in tandem, which I find, quite interesting. Probably not a surprise that SPX and Dow are kind of late to the game. There are, the other larger retracement numbers here for each of the indexes. If, it could be as soon as today. I don't expect it, but if we start to get into another significant downturn, you've got your levels here for all the indexes coming off of the March 2020 lows. SPX and Dow, as you can see, are nowhere close to the depth of the pullback as we have in Russell and NDX. SPX has retraced 13%, a little over 13%, Dow a little over 11%. I got a typo there, Josh, that I'll have to fix. I said the recent in SPX, the recent 323 low, that's actually 314. The recent lows were well off that 4162 number, but you can see nowhere near 3/8 retracements in either the SPX or Dow. So lots of numbers, but something that basically can maybe use as a reference guide, especially if the market turns around and heads south again. Just in terms of where we are, and just going back in terms of those initial indexes, the Russell and the NDX, I've always found it pretty amazing that in just really crazy volatile markets, indexes, and stocks oftentimes do trade to those retracement numbers. And, that's exactly what's happened here with Russell and NDX so far. Remains to be seen whether we'll get that in SPX and Dow in the days ahead. But we are already 7% off the lows in Russell, 5.5% off the lows in NDX, and then 3.5% off the lows in SPX and Dow. So it just speaks to the wild movements we've got in the markets. The nice thing about the retracements that we've talked about before is that, there are future targets to look at. So if you're paying attention to those numbers and, Russell and NDX get down to those levels, maybe you're initiating, some kind of bullish trade. So that's all I wanted to go over. Just hopefully this may work as a reference guide for you if the markets turn and head south again.
Joe?
Josh? Yes, Sudhir?
Yeah, could you put this on the share drive? I'd like to review it in a little bit more, detail off the call.
Yeah, absolutely, Josh. We'll definitely do that after the call. We'll post it to the share drive, and I didn't, as I've mentioned before, I like the retracement numbers coupled with, the Elliott wave analysis. I think there wasn't a lot of symmetry, not a lot of clear 5 waves to the downside. So I thought maybe easier today and best to just, work off the numbers specifically, and we'll definitely post this to the share drive.
And then the other question I have, so what is your vote, the three of you, Joe, Dash, and Shawn? Are we seeing a short covering rally and there's further downside, or which is my opinion, by the way, and is this the bottom and we're moving up from here?
Easy question, Sudhir.
You don't all have to agree. I'm just asking for a vote, and my vote is there's further downside.
Well, all right. Joe, you want to go first?
Go ahead, Josh. Because I'm undecided. It's not a cop out, but I am undecided.
Yeah, well, I'm like a numbers guy, so probabilities, I'm in the same camp as you, Sudhir. I mean, there's so much more things that can go wrong than can go right. What are the upside for the markets? Just because the rates are kicking off doesn't mean the market's going to tank. A lot of times, it'll go up, for a while, but there is a tipping point for rates like when we heard, I don't know what that is specifically. I think it's 2.5 right now, you know, for the Fed funds rate. But there's a tipping point where, you know, it'll just, you know, crash the economy. You know, so, you know, with all the geopolitical stuff going on, supply chain issues, inflation, there's so much, you know, if things reverse, you know, like Ukraine, that whole thing irons out, you know, supply chains get better, then obviously, you know, we can have a lot of upside. I just don't see stuff like that resolving in the near term here. So that's kind of why, you know, it's just like, you know, if you make a list of things that, you know, will drive the market down and up, you know, the list to down is, you know, a lot bigger right now than the list up. And that's kind of why I'm in that camp.
Shawn, what is your vote?
Yeah, I'm in the same one as you guys, right? I mean, I think like Josh mentioned exactly that seems like there's just too much that could go wrong. I think that's the perfect way to put it, right? I mean, like you said with your trip out west, you know, and then what I see on a daily basis with the family, it just seems like prices, inflation is just not getting any better. And then even though you do get a little good or maybe somewhat good news out of possibly what's going on with Russia and Ukraine, they might be coming, you know, to different talks and things like that. It just seems like that, you know, again, just too much can go wrong. So I'm cautious. You know, I think there's still some really good trades to be had on both sides of the market. But, you know, being a little more cautious, maybe not putting, you know, as much in the trades as I would previously, but really putting on a lot of those hedges too. I like those hedges, like we talked about, those iron butterflies. And I just think that keeping those going is just is better suited in this particular time, especially with what's happening, you know, all around the world and within the U.S. markets. You know, again with inflation and you know, crude oil prices have come down a little bit, so you get crude coming down, the market's somewhat rallying, but I'm not really seeing those dropping crude prices at the gas pump that much, right? I mean, my gas is still pretty expensive, so I just think that even though we're getting these little short-term rallies, that we still got some more downside coming.
I have
Yeah,
one
interesting
question.
thing, by the way, when you were showing that state 8 graph, you know, obviously it was going across the screen fast, but it seemed to me that the bottom of the market was more coincident with the state 8s reaching above 70% than crossing 50. When I was watching it on the screen,
Yeah.
it was the bottoms of the 2020, 2018, and all that were more toward the state 8s reaching 70, and we're crossing 50 right now. So
Right.
to me, and also given that the Fed's raising interest rates, they say they're going to stop buying bonds, but they haven't done it yet. And of course, the Russia-Ukraine thing, I just think there's further downside.
Yeah. Well, today they're
Yep.
supposed to stop buying stuff. So
You know, this is Dave. There is another possibility that we haven't talked about too much, and you know, have we kind of hit the bottom, and maybe there's still some ways to go down because there's still more of the negative catalysts than the positives, which is absolutely true. Or we could have hit the bottom, and are we maybe hit the bottom and could go up? I think the other possibility is maybe we're going to be range bound for a while. And I say that because I don't see anything that the Fed's, you know, they're going to raise a quarter point today, right? But, you know, that everybody knew that. That's not going to change anything. The real test will be what happens to inflation and what is the expected, what will the market expect out of the Fed next time, you know, and they don't meet in April. I think they meet in May early May. So if there's a big push by, you know, inflation going up after the quarter point raise, which is going to happen, I think, more likely to happen than not happen, in my opinion. And there'll be a push to raise interest rates even higher, and still not having an effect on the two major points of inflation, which are gasoline prices, and food. You know, that I think will keep us closer to the bottom part of the range, but what are the catalysts moving higher? I don't think there's that many. So I think we'll be kind of range bound and sort of stuck toward the bottom. That would be where I would place like 3 to 6 month bets anyway. But so it's not a bounce. It's not a, we're not, I don't think we go from Fibonacci, 0 point to an inflection point, back to a 0 point, back to a high, to an inflection point. I think we're going to be range bound for a little while because there's so much right now that's unresolved, and the fact and the potential for the major issues to be unresolved in a short period of time is low, in my opinion. So that's why I think we'll be kind of range bound. Pick your limits. I don't know where those might be. Maybe the recent bottom is the bottom limit, and maybe the high will be wherever we get to in the next couple of days before there's more pressure to raise higher the next interest rate meeting, which will be in a little while. That's what I think anyway. My 2 cents.
Yeah. Well, I think we all agree that a quarter point hike does nothing to impact 8% year-over-year inflation, and that's based off of their current readings. And I read something that they change, the CPI and all that's changed over the years. So if they use the same one back in that we had in the early 80s, we'd be at 15%. So I don't think a quarter point does anything to inflation. I think the key thing, and we can kind of pull that up. Kind of good segue there, Dave. Hold up Studiers. No, that's not it. The FOMC watch tool. So, I pretty much went through the whole year. They're expecting at least, the market expectation right now is pretty much a quarter point every meeting, for the rest of the year. And then, so we'd be at the end of the year right around 175, 150 at least. So that's kind of the expectation. What the Fed puts out today, I think is going to really impact markets, going forward, what their expectations are. And I think the bigger thing that hasn't been talked about a lot is just the balance sheet. What goes on. Obviously, we know they're going to stop asset purchases. So what happens to the balance sheet? I think if they were going to be bullish, they would say they were going to keep it at the same size, and just renew purchases as they expire. That would be like a bullish case, I think. I think the expectation right now is for balance sheet runoff. So when things expire, they just let them go and run off the balance sheet like that, kind of what they did in 19. Anything less than that, where they're aggressive getting rid of that, that would be very bearish for the market. So, we talked about, they've done testing. We lived through it, and I'll just pull up the SPX chart, right? So 2018, that's when they raised the rates, right? And then, they turned around, we had a nice Christmas V bottom, but that's when they were very aggressive raising rates. So that was, their test in the market. Back in 19, they had started running off the balance sheet. And then all of a sudden, I don't know if you guys remember, it was like the fall, and we had some kind of, overnight lending rates went to 10% in one day, like liquidity crisis went, bonkers. And then they started buying assets again right after that. So that's, they've done testing, live on raising rates in the current environment and, running off the balance sheet. And they were both negative for the market, like real bad. So if they're going to start doing them together, that's just makes it very interesting, like how fast they go and what they do. So I think that's kind of the key things to watch and listen to from the Fed. I found one chart and kind of the headline, financial tightening usually ends with a financial event. And I think we can all agree with that. The last time they raised aggressively, we had, the market just crashed until they stopped. So, obviously, we have more and more assets on the balance sheet, so things get more and more complicated and, uncharted territory as far as Fed balance sheet. So that's just something that I found. That was the only useful one I found. I was looking for a while to find good charts, but that one kind of drew it up for me. A couple other kind of quick things. There's this headlines about Russian debt. So they have sovereign bond payments due today. I think 150 billion. So with the current sanctions, they're not allowed, they locked a bunch of their accounts. So there's a lot of uncertainty, because they can't pay them in rubles, their currency. So I think that's kind of a, we talk about all these liquidity and currency crises caused by, Fed. This one would be, a fiscal, problem, where they're locking down all the Russian accounts, but that's something to keep your eye on. A lot of people haven't talked about, the Chinese having huge issues with, their real estate development companies, like 3 of the top 5 are missing bond payments. So, people haven't been talking about that a lot, but, on the other side of that, China announced today that they're going to be basically supporting capital markets, which is why you see huge moves in like Alibaba and FXI and things like that. So, but that like Evergreen, I mean, that made news for a little bit, but we haven't got much on that. So a lot of kind of debt issues out there, kind of floating in the background. And this is all a debt economy. So something to keep your eye on as far as that. All right. And the only other kind of newsworthy thing I pulled out was I read a bunch about Hong Kong being in COVID lockdowns. That's pretty much disappeared for, since Ukraine, but, I still keep my eye on it. And like Germany is also having a bunch of issues with COVID, round whatever 5 or 4, whatever we're on. But, China's locked down like cities, like 17 million people. So not sure what's going on there, but just another kind of thing to keep your eye on. Not to be the bearer of bad news, but just, keep my eye on the headlines and bringing out stuff that I think is important, overall for the market. Yeah, so now open. I'm done. So, comments, questions? Someone was
Well, I think
talking.
the Russian debt thing you brought up is I don't know how much debt Russia has and who owns it, but I heard they're gonna want to pay in rubles, which are now worthless. So nobody wants rubles, and so they may just default on their debt here pretty soon. Like I said, I don't know how much it is in terms of the world financial markets.
It's right here, 150 billion.
Okay, good point. Yeah, that could be a really big deal.
It was a big deal for Exxon, I know. And I think the U.S., if they, what do they call, nationalize the assets that were sanctioned.
I mean, the people that hold that are,
they're going to walk away from them. We're going to have to just write them off. So the people that are invested there, I think that's where the risk is for the spot companies that have big investments in Russia are going to pay the penalty there. But I was just going to say also that the lockdowns in China are just a lagging indicator for supply chain issues when they happen here. So, good things to watch. Like Shawn just said, or Josh just said. Sorry.
what's that, Dave? You broke up.
Oh, it's I don't know which part I broke up on, but the supply chain issues are just a lagging from the lockdowns that we see from China. So all the folks that need resources or components or whatever to finish projects that we're going to sell here are kind of like 3 months or 6 months from being affected. So
Mhm.
you're right to maintain that. And whoever has exposure to Russia, whether it be banks, I think banks are the biggest ones. Oil companies are the next biggest ones because that's what Russia exports, is deals a lot in oil and natural gas, right? The
Yeah.
European Union is getting hurt a lot more than the US because the US doesn't have that much exposure to Russia. But the companies that do might have tough earnings reports coming up because they're gonna have to write down, I think, all the assets that Russia's just gonna take over because we're not doing business there. They're going to just take over all the McDonald's and, you know, whatever
Yeah.
they're there. You're going to have to walk away from them.
Yeah, well, I read Dutch Shell just like walked away from their Russian investment, like billions worth, gas and oil stuff. They just like
Yeah,
walked-
they're trying to sell those, but there's nobody buying them. So I don't know what that does to them. They haven't sold them yet. So what does that mean? If they're not going to sell them, they're going to have to just write them off?
Yeah,
That's the question.
yeah, yeah. I mean, it's like, stuff in Venezuela, like people invested in and, they get nationalized and, they're stuck, holding a bag. Thanks, Dave. Anyone else? Comments, questions? I know it was a lot. There's just so much, it's hard for me to actually like, you could probably go for hours talking about this stuff, but kind of want to pull out the key things I've been looking at for the market.
Yeah, this is just a comment from me,
Yeah.
from Shawn. So yeah, I just wanted to say, that you do a great job, like I mentioned before on the other calls on these weekly meetings, that, a lot of the stuff you talk about, we don't talk about prior to this. So a lot of the numbers you talked about and the things you give, I write them down and I track them and I watch them and I try to, use them daily if I can, right? Put them into Delphian and use them for the studies and things like that. So, I just want to say great job.
Thanks, Shawn. Yeah, I felt a lot of pressure on this one. There's just so much going on. Excuse me. Okay. Anyone else? I don't think we're gonna, Shawn, we'll probably just close it up here. I know everyone wants to be tuned in to the Fed and all that.
Yeah, no, definitely. And really all I was going to talk about was, everybody's really cautious and we're just being, putting on these hedges and just talking about trying to protect ourselves to the downside. But, what we've seen over the past couple of days is this market, rally up, substantially over the past 2, 3, 4 days. And that just leads me to just mention some of the studies, right? The studies are still really good trades. And just because the studies come out every day or every so often, there's 5 or 6 trades that come there. You obviously don't have to trade every trade, but, if you are comfortable with a couple stocks and you watch those stocks, then you do see those symbols come across on the studies. Maybe take a little deeper look into those because the company, there's some banking stocks recently that had come about, in the studies and, we know the rates are going up. So, that might affect those companies to go a little bit higher and they have gone higher over the past couple of days. So, I think even though you're a little bit cautious on the market and what's going on, still pay attention to these studies because I think a lot of those signals are really valid, and especially with some of that stuff that Josh is showing regarding, the moving averages and, those kind of apply over to the counter channels and apply over to the Bollinger Band. So, just keep looking. I won't talk deeply about that. We can go into it later, but, I just wanted to kind of bring that up. So.
Okay,
That's
thanks,
it.
Shawn. Yeah. All right, well, we'll do last call here. Any other questions, comments before we close up? All right, well,
No, sir.
we'll be tuning in here, everyone, I'm sure, watching the Fed. So thank you all. Hopefully we'll have earnings. We'll try and get it next week, but it's really dependent on the status stuff. So we'll keep you updated on that. But otherwise, have a great week. Thanks for tuning in.
Thank you.
Thanks, everybody.
Thanks,
Everybody.